Archer Daniels Midland announced just recently that it had suspended its chief financial officer and initiated an investigation into the nutrition section. The announcement sparked a sell-off in the company's shares, wiping off about a quarter of its market worth. Stock awards account up a significant portion of ADM's senior executives' compensation, as do many of their counterparts at large public businesses. Approximately half of these awards, which are issued yearly, vest after 3 years, primarily based on how the company performs on a few key benchmarks. The other half vests after 3 years, provided the employee remains on the job. The component related to performance targets is now the focus of the current investigations. For such rewards, boards often choose indicators that represent the company's overall financial goals, such as adjusted earnings, return on invested capital, or stock performance relative to competitors. For many years, the ADM board adhered to this guiding concept. However, in 2020, it replaced adjusted earnings before interest, taxes, depreciation, and amortization as a major criteria for executive stock awards with something far more specific: growth in average operating profit in the nutrition division. The 3-year average had to be greater than 10% for executives to obtain their target pay. If the unit's growth reached 20%, they would earn twice as many shares. The unit's average growth rate from 2020 to 2022 was 21.4%. Because the company also exceeded the top level for the second critical criterion, average adjusted return on invested capital across ADM, the company's 7 top executives received almost $72 million in shares in January 2023, according to documents. A request for information from the U.S. Securities and Exchange Commission prompted the corporation to investigate accounting methods in its nutrition sector. ADM has revealed few details, when it stated that Vikram Luthar, then CFO, had been placed on administrative leave. It has not stated which quarters or years of results may be under review. Fellow investors, welcome to Level Up Dividends channel. I don't know if we can call what happened to ADM a scandal, but I surely know that financial scandals occur pretty often. Many of them tend to disappear and some others put end to the company's future. I remember what happened to Waste Management, one of the main holdings of Bill Gates' portfolio. In 1998, the Securities and Exchange Commission, also known as the SEC, convicted the company's owner and former CEO, Dean L. Buntrock, and numerous other top executives. In addition, the SEC fined Arthur Andersen, Waste Management's auditors, more than $7 million. Waste Management eventually settled a shareholder class action lawsuit for $457 million. Today, Waste Management is doing pretty well. It pays a decent and safe 1.6 dividend yield, and has a steady operating margin above 15% during the 10 last years. It wasn't affected that much by the scandal. Is it the case for Archer Daniels? Let's check it out. Let's start with the official statement of the company about what happened, and I quote, "ADM today announced the appointment of Ishmael Roch as interim chief financial officer. Mr. Roch is a skilled executive deeply familiar with ADM's business, having served in a variety of global operational and financial leadership roles since joining the company in 2004. The appointment follows the decision of the ADM Board of Directors to place Vikram Luthar, Chief Financial Officer and Senior Vice President, on administrative leave, effective immediately. Mr. Luthar's leave is pending an ongoing investigation being conducted by outside counsel for ADM and the board's audit committee regarding certain accounting practices and procedures with respect to ADM's nutrition reporting segment, including as related to certain inter-segment transactions. ADM's investigation was initiated in response to its receipt of a voluntary document request by the U.S. Securities and Exchange Commission. ADM is cooperating with the SEC. The board takes these matters very seriously," said Terry Crews, lead director. Pending the outcome of the investigation, the board determined that it was advisable to place Mr. Luthar on administrative leave. The board will continue to work in close coordination with ADM's advisors to identify the best path forward and ensure ADM's processes align with financial governance best practices. The company has taken the investigation seriously and reacted rapidly to it. I'm not worried about its ability to cope with this situation. Big companies have often the weapons to deal with such matters. Besides, it is only the nutrition section that is under investigation. The nutrition section accounts only for 10% of the company's revenue. We are not talking about something that touched its main source of income. I see many investors became doubtful about the stock and its value because of this scandal. I don't say it's not a problem, but these kind of scandals occur. By the way, Archer Daniels already survived many scandals. There was the Sherman antitrust violation scandal in 1920, then the price-fixing issue in 1993. At that time the stock didn't react that much to the scandal. Then there was the tax dodging issue in 2011. Again, the stock didn't suffer a sell-off that year. So why would today's scandal be different? I really think it offers an opportunity here. Let's look at the company's numbers. ADM has grown into one of the world's leading agricultural origination and processing firms, with plans to expand into human and animal nutrition as well. The majority of ADM's revenue comes from the procurement and processing of corn, oilseeds, wheat, and other commodities utilized in the global food, beverage, animal feed, chemical, and energy industries. ADM serves 200 countries. It's hard to find a company that operates so widely in the world. I like this much. It makes its products and services vital to people and animals of almost all the countries of the world. I can't imagine such company fade away. Since 2014, Archer Daniels makes at least one acquisition per year every year. It is the giant of the agricultural world. Archer Daniels is A-rated. Its short-term debt is decreasing significantly. This is the kind of bad debt that has often high interest rates and that compels the company to make payments in the short term. Long-term debt is safer and more adapted to a company. As for investors, the company has been paying dividends and more importantly increasing them for 92 years. 92 years, guys. It's a lifetime of increasing dividends. I found the recent drop in the stock price a golden opportunity to buy the stock. Another thing that some people argue about is the correlation between the commodities prices and ADM stock price. Of course, corn prices have an impact on ADM's performance, but they aren't tied together. In November 2022, ADM's stock price reached a new all-time high at $100. At that time, corn price was around $670, which is lower than its all-time high of $800. This is really not surprising. The company is much more than some basic mills producing corn, wheat, or whatever seeds you know. The company also provides agricultural storage and transportation services. The firm's stability is bolstered by ADM's high capital intensity, which raises entry obstacles. ADM, for example, has one of the largest grain terminal and shipping networks in the country, as well as hundreds of processing units and storage facilities around the world and thousands of railcars, barges, and semi-trailers. Let's conclude with the numbers I always feature. Dividend yield, 3.77%. Dividend safety, 80. Dividend growth, 11% per year in the last 20 years. By the way, Archer Daniels just increased its dividend by 11% in January 2024. Dividend growth streak, 92 years. Tell me in the comments if you already have some shares of this company or if you are willing to buy it. This is it. Remember, I am not a financial advisor. Don't forget to make your own due diligence before investing. Please push the like button if you like the video and subscribe to the channel for similar content. I'll see you next time.